Alright guys, this is Nathan, and as I mentioned in the article, I just wanted to show you kind of a tangible way to see how stop losses, whether increasing or decreasing, affect your win ratio. Obviously, the mathematical principle is that the larger the stop loss, the better your win percentage will be. And that's true because the more room you give it, of course, the more likely it's going to be to eventually hit your target. But I just want to show you kind of a tangible way of seeing how that works and kind of what those numbers might look like. The way I'm doing that is with the strategy tester on MT4, and I'm just using an EEA that Tim, our programmer, created just for that purpose, actually, to kind of see how these ratios look. So the first one I'm going to do is with the 50 pip stop loss and a 50 pip target. So 1-to-1 risk to reward, and see how our ratio looks. And I'm just running this as a 1-year test, April of 11 to April of 12, and I happen to be using the US dollar, Canadian dollar, not for any purpose, just because that's the pair that has data up right now on my terminal. So we'll start this test and we'll see how it works. Obviously, we're expecting some kind of ratio near 50% because it's a 1-to-1 risk to reward. So we'll see how that works. And of course, we're not really assuming any of these tests are going to be profitable because they're just random entries. But it's just a way to give us an idea of how the risk to reward interacts. Okay, so that was it. That was a full year right there. And we're at 47.97%. So that's 48%, pretty close to 50, kind of what we're expecting. And of course, less than 50% is not going to be profitable when you're running a 1-to-1 risk to reward. You'd have to hit more than 50 to be profitable. We see that our net profit was actually minus $1,400 from a $10,000 account. So really not that bad for a whole year of testing with kind of random entries. But let's run another test and see how it changes. So we'll change our 50 pip stop loss to a 25 pip stop loss, and we'll see how that works. And of course, we're expecting the win ratio to decrease because there's a smaller or a tighter stop loss, and that should hurt your amount of wins. Who knows what it'll do to the profit? The profit could increase or decrease, but we will see. Okay, so that was a year. And we see that obviously the percent of profitable trades did decrease to around 32%, 31.98. And actually also the profit did decrease. It was negative 2,300. So a 1-to-1 ratio is actually better than a 1-to-2 ratio in this case. Okay, so we'll do one more test just to give us an idea. We'll move the stop loss up to 100. So that gives us more room to hit our target. Should increase our winning percentage. Who knows what it'll do to profit, but we'll see what that does. Okay. So obviously we're seeing some win streaks here because of the larger stop loss. It seems to actually be a little more profitable too as it's staying closer to the 10,000 range. Oh, now it's decreasing. Okay, so let's see our report. And of course it did increase up to close to 65%, 64.97. And our net profit was $775. So it actually was the most profitable of the three examples. Not that I would be happy with losing money throughout a year, but it's interesting to note that the larger stop loss compared to a smaller take profit was actually the most profitable. Now, of course, you could take that to an extreme to kind of give yourself an idea. Like, for instance, if we did a 500 pip stop loss and a 10 pip target, obviously we're going to hit an extremely high percentage, but I'm assuming that it's going to be less profitable than the previous test, even though from what we've seen, larger stop loss compared to smaller take profit is a better ratio than vice versa. So there we go. So you can see that in this test, once you start taking hits, it starts decreasing your profit pretty bad. Okay, so that test actually was not too bad, really. Um, the net profit was only $69. So because the market conditions didn't really um, make too many swings against the initial entry, that actually wasn't that bad. So it's interesting to note that, of course, the win percentage increases because on that one we had a 97.5 win percentage. Um, but even a 97.5 win percentage does not make you profitable. It's obviously about more than just your risk to reward or your win percentage. There's a lot of other factors. But it's interesting just to kind of see this in a tangible, viewable way. Um, and so that was my goal. So I hope you enjoyed getting an idea of that a little better. And I'm going to continue on talking about this idea of minimizing risk and maximizing reward and how that affects this particular idea of larger stop losses equaling higher win percentage and how that interacts.